Hello, everyone. Welcome to my YouTube channel. Once again, I'm so appreciative of you all. Today, I want to go ahead and talk to you guys about some key underwriting questions and how those questions are answered, especially for those of you who are interested in getting a career in underwriting that would like to see if you can actually work as an underwriter, what the position entails, and most importantly, the ability to pass the test. Because at the end of the day, you have to be able to excellently pass your test with at least an 80% or more in order for you to get this position as a mortgage underwriter. So today, let's talk a little bit about the process, what it entails, and how you can go ahead and actively pursue this career and be successful in the career as well. So again, what I like to do is ask you guys show you guys some of these sample questions, what the sample question looks like, and then also, of course, provide you the answer to the question and the explanation as to how these questions are asked. So question number one, the following are forms of documentation that may be used to support the earnings for the self-employed borrower, specifically a document used by a corporation. A, 1040 Schedule C, B, 1065 K1, C, 1120 SK1, D, 1120, and E, none of the above. The answer will be D, 1120, and the reason is self-employed borrowers that are filing as a corporation, also known as a C Corp, not an S Corp. So a corporation is considered a C Corp. There are also S Corps. The S Corps will file an 1120S. So here, the C Corp files a form 1120. The tax form for 1120S is used for an S corporation. 1065s are used for partnerships or LLCs. And the 1040 Schedule C is used for a sole proprietor, a single member limited liability, or LLC. So again, folks, when you do have your underwriting questions that you have to answer, this is going to be one of the questions that they usually ask is, how to be able to understand the self-employed borrower and what the difference is for each self-employed borrower. And it's your responsibility to know how to answer these questions. So this is very, very important to know. Again, the answer here is D, 1120, not 1120S, simply because we're filing a C corporation. Number two, which document may disclose the percentage of ownership the borrower has? Now here, this is asking questions about the percentage of the ownership that a borrower might have in a business. A will be 1040 Schedule C, B will be 1065 K1, C will be 1120 SK1, and D will be 1120. So, and E, of course, will be all of the above. The answer in this case will be E, all of the above. And the reason is all of the above tax forms may disclose the percentage of ownership your borrower has in the organization. So again, when you look at a tax form, sometimes it tells you what the percentage of ownership in the organization is. It's a good way for you to know if there are multiple owners of the business, how you're able to calculate the income and provide the right amount of income to the borrower. For example, if there are 4 people that own a business that is making $1 million a year, you can't say that the borrower alone makes $1 million a year. You have to understand that that $1 million will be divided by 4 to give that $250,000 in income for each borrower. Number 3, a letter from a corporate accountant on a letterhead signed and dated is acceptable documentation of your borrower's percentage of ownership in the corporation. A, true, B, false. The answer on this will be A, true. And the explanation is a CPA letter is sufficient in providing ownership percentage of the borrower during a loan review. So when you're reviewing your loans, you want to make sure that if you don't see on any of these tax forms what the percentage of the borrower's ownership is on the tax form as far as the corporation, your job is to then request for a CPA letter to tell you how much ownership or what the percentage of ownership the borrower has in the business. The reason is the CPA is usually the one that files the tax return for the borrower. So when you're able to get that information for them, it makes it a much easy, streamlined process and allows you to make a decision on these loans. Number 4, asset question. So reserve are liquid assets that are available to the borrower after closing. So let's read that question again. Reserves are liquid assets that are available to the borrower after closing. The answer to this will be A, true. not B, false. Again, the answer is A, true. The reason is for assets to be considered reserves. So when you think of the word reserves, you think of what you have in addition to what you are really showing, and that amount of that reserves must be easily liquidated or converted to cash. So again, in my course, I'm able to, again, the course is in the description link below. I'm able to explain to you how these processes are reviewed and how your asset files are reviewed, and most importantly, how and what will be considered acceptable reserves and things that will not be considered acceptable reserves. So again, it's important to know these things if you're going to be working in the mortgage industry as an underwriter. My course currently has 5 stars in Udemy, so thank you for all of you who are actually actively taking the course. And I'm going to say that you can learn so much about the process of underwriting by truly applying yourself and understanding the process that would allow you to be successful in this career if this is the field that you've chosen. The next question, a borrower reserves must be easily liquid or near liquid financial assets. Which of the following items may not be considered reserve funds? So back to the reserve question. When we think of reserves, remember we said it has to be easily liquidated in order for us to be able to consider it as reserves. So in this case, a savings account will be A, B will be bonds, C will be certificate of deposit, D will be stock options, and E will be Roth IRA. So in this is a pretty tricky one, so I'm very glad. I hope some of you are learning from this. The answer to this will be D, stock options. And the reason why is stock options are typically not easily liquidated. And the reason they're not easily liquidated is because they're tied to the performance of the company in the physical year. So therefore, in order for assets to be considered reserves, they must be easily liquidated. Look, in this case, a savings account, you can always pull out the money whenever you want. A bond, you can sell the bond at any time you want and be able to get your money. A certificate of deposits, they might have penalty fees, but they are also easily liquidated. And a Roth IRA also would have penalties. It depends on what age you are, but they also are easily liquidated. For a stock option, in order for you to liquidate the stock option, you have to see what the company did in that physical year to know what your stock options are worth. So stock options are typically not easily liquidated because they're tied to the company's performance. And that means that in order for you to be able to use it for reserves, actually it would not qualify for you to be able to use it for reserves. The next question is, which of this document is used by a sole proprietor? We answered this in our first question. So A will be 1040 Schedule C, B will be 1065 K1s, C will be 1120 SK1s, D will be 1120, and E will be all of the above. The answer is A, 1040 Schedule C. Congratulations. And the reason is a 1040 Schedule C is a tax form used to report the earnings of a sole proprietor. And then back to, like I mentioned to you guys in the first question, the tax form 1120S is used for the XS corporations. 1065s are used for partnerships or LLC, and 1120s are used for C Corps or just corporations. So here again, the next question is, which document may disclose the year-to-date earnings of a self-employed borrower? A will be 1040 Schedule C, B will be 1065 K1s, C will be 1120 SK1s, D will be 1120, and E will be none of the above. I'm going to take a second for you guys to think about what the answer to this one would be. The answer will be E, none of the above. The reason why is for a year-to-date earnings for a self-employed borrower is typically provided on a profit and loss statement or a P&L statement. The year-to-date earnings for a self-employed borrower is usually not provided on any of these tax forms because, again, what we're looking is what that year is to date. So, for example, if we're in October of 2022 and we need a year-to-date statement, say from January 1st, 2022 to October of 2022, we are unable to find any of that information because these tax forms are filed for the entire fiscal year. So what happened from January 1st of that year to December 31st is what will be shown on the tax return. But in order for us to be able to see the actual year to date, we need to be able to focus on getting an actual profit and loss statement that is a year-to-date profit and loss statement. So therefore, in order to complete these tax forms, it will be reflected on the final fiscal tax year, not on the year-to-date statement. So again, remember, when you see this question on your mortgage underwriting exam, it's a tricky question, right? Because you're thinking, well, all these tax forms already show me the fact that this borrower has this income for the prior year. But what it doesn't show you is it doesn't show you the actual year to date. That's the thing about underwriting. It's very specific. You have to be very careful with these things, because if you overlook it and you try to kind of skip the steps, it can be extremely dangerous to your career moves. So again, this will be the end of the course, end of the questions. Again, feel free to reach out to me if you have any questions. My goal is to help you be successful in this. If you have any questions, again, don't forget to click the description link below. It does have the access to the course. It's a great course. It's well priced. It's very easy to learn. There are also additional documentations that I provided to you, including a 25-part practice test, right? Because again, I want you to be successful. So the best way to be successful is to take some tests that are sample tests for what you should expect when you actually get the job as an underwriter, as well as the sample questions that you would see before you even get an interview that most underwriting companies will ask you to take. So I've actually put together a good 25-part questions, full with explanations, answers, and explanations, so you can go back to use these as resources when you're ready to take your career move and move on to a much higher career that can pay you a lot of money and can help you grow in your chosen profession. Again, thank you very much, everybody, for taking the time to watch this. I'm excited for you. Don't forget to click the link below. And for those of you who still have any questions or still would like to contact me, please don't forget to like, share, comment, subscribe to my channel, and I'll be glad to answer anybody that has any questions or reaches out to me in regards to the underwriting process.